Hey traders, John Howell here. In this video, I'm going to talk about the theory about the next market crash. Okay, people that believe that the next market crash is going to happen in the next few weeks. We're going to see we're likely to see another drop like we did at the start of the year. What's really going on, and what's likely to happen moving forward, and what's really going on underneath the surfaces? What caused obviously the situation there? But what's really going on here? Are we going to crash? And if we do crash, what's it really going to look like? And what's going to happen here? What's really going on right now when it comes to the Fed and so on and so forth? There's a lot of people out there saying the market's going to crash right now. And I want to throw my thought out there. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, over the last 15 years, we've tested 64 different trading courses, and we have put the most powerful systems and trading techniques that we've discovered in this brand new trading course. And for a limited time, I'm giving away free access. So go to johnsfreegift.com. That's johnsfreegift.com, or click on the very first link in the description to get free access to this brand new trading course right now. So let's get straight into it. The thing that I want to share with you is a lot of people right now are saying that the market is going to crash, right? The market's going to crash, market's going to crash, market's going to crash. Oh my goodness, this is so bad. Bankruptcies, blah, 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 blah. Okay. Guys, firstly, we've been having bankruptcies ever since the whole thing happened in March this year. Right now, we're looking at the Dow Jones chart. So what we're seeing right now is this. As we can see, the market went like this. The printing went like this. Doesn't that really look similar to to like what's really going on, right? Did you just hear what I just said? The market went like this, the printing went like this. Now, let me ask you a question. Is the printing just going to go like this? Or do you think the printing is going to go like this? Right? Here's the thing. The Fed is at the helm right now. If you listen to Ray Dalio stuff and you really understand what we're in right now, this is not 2008. And by the way, I'll get to 2008. If you believe this is going to be another 2008, then listen up, okay? Because a lot of people think in their mind, when they think crash, they think exactly like this here, right? They think, oh, it's gonna go down in 1 day or 2 days or 1 week, And in fact, this actually took over a month for this thing to go down. Remember that, guys? That's over a month of thinking about it, looking at it, and so on and so forth, right? A month of dropping down. Now, firstly, a lot of people have been saying that. Firstly, the whole thing that happened here in March 2008, what was that? That was a black swan event. We're not likely to see another black swan event. Why? Because we already know the whole situation with the virus situation, right? We're starting to slowly open up around the world. And yeah, while it's going to be a bit here, there, say there, around the world, probably by the start of next year, we're probably likely to start to really see things open back up again and get back to some normality, okay? So here's the thing, is that right now we're in a different situation. We're in a different era right now. Right now there's big fighting New World Order between America and China, okay? But at the helm of the markets, the Fed is at the helm of these markets. So the thing is this, is that if the Fed keeps printing money, the market's likely to keep going up, okay? So let me just say that once again. If the Fed keeps printing money, and also they keep interest rates low, what do you think is going to happen? Okay, yes, it's going to create a bubble and blah, 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 all that sort of stuff. But in the interim of what's likely to happen is we're probably likely to still see the market continue to rise to all-time new highs. Now, that's not my opinion. It's just like, well, look at what the market is doing. Now, when I say the market is likely to make all-time new highs, like the Dow Jones, the S&P 500, and so on and so forth. Or the S&P 500 already made new highs. But why do I say that? Well, here's the thing, okay? Donald Trump is at the helm right now. And as long as he's at the helm, do you think he's going to let the market continue to go down or go down? If it does, he's going to come right back in and support that thing, right? Stock market, new highs. Even though, stock market got nothing to do with the real economy. When we're talking about the actual markets itself, not the real economy, okay, the markets itself. we can see that the Fed is at the helm of what's going on here. And so if what happened in March was a black swan event where the market knew massive shutdowns were going to happen. We're not going through another massive shutdown again. Even Trump said that. And here in Australia, we've had mini shutdowns and many spikes in the so-called virus situation. Put air brackets around that so-called situation there. And so we can see that that's what's happening, right? And so overall, if overall we're going to get pullbacks in the markets, we're going to get, as you can see, we do get these pullbacks. But as long as the Fed is at the helm, we're probably likely to keep rising up here. So is the stock market going to crash in the interim? Probably not. No, because we're probably likely to continue going up. Now over a period of time, when the government starts to get squeezed. Now remember, guys, here's a really interesting thing. Okay, firstly, at the interim, no, we're probably not. We won't see another. We won't see another March. So if you're banking on another March happening right now over the next few weeks, then no, right? We may see a bit of a pullback down to 26,000 or 25,000 on the Dow. Yeah, we may see that, but not a whole complete fall off the cliff type of a movement. And if you're banking on that, then don't. Okay, don't, because why would you want to gamble that sort of thing there when you've got amazing opportunities all over the place to be trading? Okay, don't be trying to short this market right now. That's all I say. Be smart with your money. And so with the government, once again, they're at the helm. The Fed's printing money here right now, and they're gonna keep supporting this. We're at a new era right now, and you'll be able to see, especially where the new era is, especially where the government is printing money and putting money into different sectors. That's what those sectors are likely to probably do the best overall. Now moving forward, obviously inflation is likely to start picking up as well too. That's going to be very bullish for miners and metals. So that's the interim. Now let's actually debunk some myths here right now as well too. A lot of people think, and I see this thing in this whole trading industry, a lot of people think that you think when you hear the word crash, you think this, okay, big massive meltdown, right? Don't you? Like one day it's just gonna crash. One day it's gonna absolutely crash and fall off the cliff and blah blah blah. It's gonna be all over. But here's the thing about crashes in markets. Yeah, we do get very big solid down days and so on and so forth. But as you can see, that even back in March, this actually happened in the middle of February. Middle of February, and then the bottom was over 1 month. It took over 1 month for that to happen, right? It didn't happen in one day. Even a black swan event like that didn't happen in one day. It didn't happen in 1 week, right? It happened over a month for that thing to high to low on this thing here. And as you can see, even in this pullback, look, even this drop here, look, we even got a bit of a rally, and we got up days and down days and so on and so forth. So if we are likely to go through another 2008, I want you to think about 2008 in a whole here. Let me go back to, say, a 6-day chart here for a minute. Let me go back to a 7-day chart here for a minute. And I want you to think about this for a minute, okay? If you have a thought in your mind, but the reality is completely different to what most people think. Most people think crash, big solid down day. One day it's all over. It's going to be all over from there. I'm going to short the market today, and the next few weeks it's going to crash, and I'm going to make a lot of money. I've been there, done that, got the t-shirt. But I want you to think about this from a reality perspective. Down movements or pullbacks or down periods in the markets take time. They don't happen in 1 week or generally even over 1 month. Over a month period, we may get, like you can see here, look at this. This is 2008, right? Remember, this is 2008. This is 2007 top. Look at the big swings, big drop down and a big rally up. And then we got a nice drop down here. We've got a bit of a rally up, and then we've got a drop down, and we've got a rally up, and we've got a drop down, and a sideways, and a drop down. Now, this here is the middle of 2007, and this is getting into 2009 over here. So if you want to say, oh, this is going to be another 08 stock market crash, the reality of stock market crashes, and I put massive air brackets around that word crash, is it goes down and we have little pullbacks, and it goes down, and that's a crash, all right? Every now and then you do get, these periods here where you get very big solid pullbacks, in the markets. But we're not going to go through another black swan event. Now, why is that? Because right now, the whole virus situation, shutdown situation, blah, 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 all that sort of stuff, that's already out there, right? The marketplace already understands there's going to be a lot more bankruptcies and a lot more foreclosures. The market understands that. But do you also yes, that's what's happening on there, right? But you also do know that on the flip side, that there's these economies, there's these sectors that are absolutely massively booming. Not everything is absolutely just going to the cake hole, okay? Not everything. I went to the park yesterday with my kids, and I was talking to a lady, and she works at a factory, Procter and Gamble, like different stuff from China. And she was saying ever since the whole virus situation happened in March, their workload spiked massively. Like they're doing better than ever before. And, and I know a lot of online businesses and so on and so forth, they're doing better than before. So while one part of the economy is doing really bad, there's another kind of economy which is just booming and more profit than ever before. So I really want you to be thinking about that as in like, okay, that was the virus situation back there, and we can see that there. But if you really look at the whole situation of fundamentally, why do people think the market's going to crash today? Like, what caused 2008? It was a banking crisis, okay? What's the problem now? If the banking crisis caused 2008, and remember, in 2008, it took over 12 months for that thing for top to bottom, over 12 months, guys. Not 1 week or 1 month, not even 2 or 3 months, okay? Over 12 months. So if 2008 was a banking crisis and it took over 12 months, what is the issue? Why do people fundamentally say the market's going to crash right now? The number one thing is what? Debt. Now, let me ask you a question. Is debt a problem right now in the economy or in the US? Yes, it is, but it only becomes, it's a problem, but it's not a severe problem where things are now starting to get out of hand. It only becomes a problem when they can't service that debt. Right now, they can service the debt because the interest rates are low. So while you have all that in place of the interest rates really low, yes, we have massive debt and deficits and all that sort of stuff. The government right now can service that debt and keep things going for now, okay? But as they continue along and as they build up more debt or either interest rates start to go back up, that's when pressure starts to come on the government. That's when you're going to start to get that slow squeeze. And as Robert Kiyosaki says, who stole my pension? That's when pension, healthcare, all those sort of government obligations are going to start to be affected. But for right now, in the interim, it's a slow squeeze on the government. It's not a big bang like, oh my goodness, everything builds up for 2 or 3 or 4 or 5 years like the banking, and then suddenly 2008 things are starting to fall apart. In the bank crisis, what's happening right now? It's going to be a slow squeeze and a slow gradual squeeze over time, over the next probably the next few years. And so with that at the helm of things, guys, if we are going to see a downturn in the markets, a crash, call it, it's going to be a slow gradual down, just like 2008. So if you think, people think, oh my goodness, stock market crash 2008, you think in your mind, you see big red, you just see an absolute just fall off a cliff, like we did in March. But the reality is that, yeah, we got nice drops in the markets, but then we got pullbacks and we had a stair-stepping fashion in the market. And that's what's likely to happen here as well too, because it wasn't the big bang in 2008 was a big bang. And we got a slow stair-stepping. Right now, it's a slow squeeze on the government with their debt and their serviceability of the debt. Either two things are going to happen. They keep printing more money where now it's going to be really, really hard. Or either secondly, the interest rates start to go up, maybe because of inflation, they're trying to control inflation or whatever. And then that thing is going to continue to put a slow squeeze on the government. Remember, the debt is only a problem when they can't monetize it, or either the serviceability of it now becomes a problem. But until then, guys, they're going to print more money, and they're going to print more money, and we're probably likely to see taxes go up as well too, overall, to start to filter this when it comes to printing this money as well too. So this is the important update that I want to give you, is that right now in the interim, the Fed's at the helm, okay? So while, yes, we will get stair-step, we will get pullbacks like we are right now, guys, okay? In a bull market, we get these pullbacks, so expect pullbacks. But the overall market is probably likely to continue this stair-stepping fashion, or a bull market in the bull market, because the Fed's at the helm and they're not going to stop printing money. And on the other side of things is I understand fundamentally why people say the market's going to crash. And what does it? Firstly, what's that fundamental? It's the debt, but the debt only becomes a problem when they can't service it anymore. The serviceability of that debt. And so right now, on the interim, no. But then also, once again, if the market does crash, excuse me, if the market does crash, then you'll see that it's probably likely to be a slowly stair-step fashion. Because remember, if we're comparing it to 2008, which was the big bang, that still took over 12 months. Okay, so guys, please don't go out there and start to short the crap out of this market, thinking the next few weeks it's going to fall off the cliff and we're going to be at 17,000 in 2 weeks time frame, and you're going to make a lot of money. Please don't do that. Okay, it's not likely to happen. We're probably likely to just keep going up here, because the Fed, especially Trump, if he's at the helm, he won't let this thing go down. He'll just probably keep going. And as long as they keep printing more money, guys, they will keep this market going. So once again, guys, I know I've repeated myself a few times in this video, but I'm trying to really get the point across here that, one, in the interim, the Fed's going to keep this market going. Okay, as long as they keep printing, the market's going to keep going. That's the individual, that's the stock market there, right? The Dow Jones and so on and so forth. The individual stocks, no. Individual stocks, guys, you're going to see, all different types of markets, bull markets, bear markets. Look at GE, right? And the banking sector is getting hit hard as well too. But the overall market is probably likely to keep going up. All the overall indices there, and everything else I've said in this video as well too, guys. So be smart about the way that you're doing things. Don't go out there and start to shorting the crap out of these markets. Why would you want to try and short something right now when you're seeing things like metals and miners? Not all mining stocks, by the way. The metals and miners setting up to be really, really nice long-term. Is why do you want to start putting your money into something? Why are you going to try to pick a top in the markets when we're already starting to see a bull market start in, say, silver or GDX or GDXJ and these other markets? It's like, or I just don't understand it. Don't throw your money at a low probability situation when you're just doing that. That's a risky. Don't try to pick a top. It's wrong thinking. Okay, wrong thinking. If you're looking for a probability to make a good return on your money, then look for a high probability. And if you go back to my previous video, you'll be able to see that as well.